Well, happy weekend there, Maverick Traders. This is Rob Reinhold. It is the trading room. We are in the third week of the month, which means that Friday is monthly options expiration. So let's get our trades all wrapped up and we'll do payouts next week. In this session, we're going to be talking about the news of the week. Lots of news happening. We're going to be talking about all the sectors. We're going to score them from +3 to -3. And then I've got some trades for you.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, before we jump into the market, let's talk about the summit. It is getting close. We are 6 weeks away. It's very, very exciting. If you've never been to a summit before, I highly recommend it. Come meet other Maverick traders. I'm not saying you're going to make your best friend there, but it's so great to connect with other traders, share information, and when you leave that summit, you're going to have a group of people around you, even bigger than you do today. Because trading is a lonely game, and it definitely is nice to have trading people around you. The topic at the summit is going to be using AI to make you a better trader. So we're currently diving into this, building this out. It is awesome. Now look, we're going to start off with what AI won't do is AI won't make you profitable. That's not what AI is about. But it's going to take all the things you're doing and streamline them. It's going to take all the things you're doing and make it more efficient. And it's going to really take your trading to the next level. So we're really excited to talk about this in the summit. It's going to be nice to see you there. All right, let's jump into the news this week. We had another sell-off. That is the 4th straight week of selling in the markets. We've now had a really ugly 10% correction. It is officially in the books now as a 10% correction on the S&P 500. NASDAQ hit 10% last week. So look, 10% correction. What happens after 10% correction? Well, I went back and looked at some of the stats, looked at the data, and here's how it sets out. If we don't go into recession, then 86% of these corrections recover within 3 to 6 months. Okay. Here is the difference. If we do go into recession, then there is more pain ahead. So that's really the question here, is when we look at what's happened in the past, is it the start of a recession? And if that's the case, the S&P could go down, 25 to 35% on average is what it is. If it's not a recession, then this is a fantastic buying opportunity. We won't know which one it is until about 6 months down the road when the official recession is announced by, I think it's the Commerce Department. I can't remember who's in charge of it. But look, it's all from the tariff drama. I know you've been hearing it on the news. I don't want to spend a whole lot more time on it, but every day it's more tariffs, less trade. People are worried about it. And we're seeing just some real numbers coming out of consumer confidence. We got another one on Friday. It was just a terrible number. And so what's happening is we're seeing a flight for safety. People are running out of stocks, running out of risk assets and buying safety assets. And gold has topped 3,000 for the first time. Now, gold does well in 2 scenarios. When there is fear, when there is risk, people run and hide in gold. When there's also fear of inflation, which means the devaluing of cash money, people run to gold as well. So this is where the stagflation trade comes in, is that if you believe that growth is slowing and inflation is still going to be persistent, gold is the asset to get into. It's the perfect asset. It's really going to be one of the only assets that go up during this time. But I do have to say that if we start to go into deflation, we're going to take a look at the inflation numbers this week. During the 2008-2009 crisis, gold had a huge run up into that crisis and then absolutely fell apart 25% after the crash. So deflation is not good for gold. If we start to see some deflation, I think this little buying opportunity in gold is going to go away. So let's talk about those inflation numbers because those were the numbers this week. On Wednesday, we got the CPI. Now, this one surprised me quite a bit, and I actually said last week, I will be very surprised if this is not above zero point 0.3 because every single reading we got from all the manufacturing, every single thing said inflation was up. As you can see, it missed. It missed, and the market was happy for about an hour. The futures gapped up, and then we sold off all day Wednesday. The PPI came out. It actually came out negative. Now, look, a lot of people think that's great news that inflation is negative. Well, look, we've talked about the Goldilocks economy. The Goldilocks economy, where it's not too hot, not too cold. We've had a lot of inflation over the last 2 years that was too hot. So we've been programmed to be thinking, oh, low inflation is good and negative inflation would be even better. No, we're now going into the too cold. The reason why you get deflation is a lack of demand. So these numbers, well, yes, they're showing that inflation is not as big of a problem as we thought. We now are starting to have the talk of deflation, which is really a negative in the economy. If you think inflation hurts, deflation hurts even more. Deflation is simply everything with a price goes down. Your house, your stocks, everything goes down. Not a great situation. And then look at this consumer sentiment on Friday. Just a big miss. That's a low number, the lowest number since 2022. And it just is not a great number. So we're seeing the economic numbers start to really deteriorate, especially the future-looking ones. I talked earlier and said, hey, if we go into recession, a 10% pullback is not a buying opportunity. If we avoid recession, a 10% pullback is an absolute buying opportunity. Which one is it going to be? I don't know. Look, I don't know. I'll tell you my opinion, but in the end, we will know in 6 months when we see 2 quarters of GDP. So what happened this week? The Dow was down 3%, S&P down 2%, Q's down 2%, IWM. Bitcoin had a bounce on Friday. If we took this on Thursday, it would have been down. And gold had a nice move up above that 3,000 as we talked about. Let's go ahead and take a look at charts. I've been very clear of what I'm looking for. I'm looking for a pierce. I said, look, we're going to break down. I need to see a bounce, a failure before I can get really bearish here. So if you take a look at where we were at the end of this week, we started to get some bottoming price action on Tuesday. And I actually did a video on Tuesday. I said, look, we're a little too far for me to go short. I'm not taking any new short positions. I'm waiting for the bounce. And on Thursday, it looked like, hey, we're not going to get that bounce. But you can see we got it on Friday. I think we're going to get up into this area. Maybe 56.80, 57.20. I think we're going to get somewhere in that area. And that's really the area I'm looking for to see what the candles look like. I want to see 1 or 2 more green candles and then a reversal where we start to move down. That to me is going to be really the red light, or I guess the green light, to really go aggressively short. I've been at -1 for a while, been a little bit bearish. I'm waiting to see what happens on this rally. And the reason for that is that if we take a look back at the S&P, and we say, okay, how many times have we gone below the 50-day moving average in the last couple of years? Well, you can see we went through it here, even below there, but look, we didn't get the rally, the failure, and the plunge. We didn't get that. And so it ended up being a buying opportunity. We got another one here last summer. We got the plunge, but we didn't get, again, the failure. Every time we went below the 50-day moving average, it was actually a really good buying opportunity. This one, you could take a look and say, hey, you know what? That one actually did fail, but it's not the same. We came all the way back up to the 20-day moving average, came back down. I'm waiting for something a little bit more definitive before I go and really say, hey, you know what? What has been a very bullish market for the last couple of years is no longer a bull market. I mean, you can stretch this all the way back to 2022. 2022 back here, where we actually saw about 4 or 5 months of some pretty bearish price action. I need to see the bounce and the rally before I really get bearish here. Hopefully everyone can understand the reason why I'm not ready to go bearish yet when the news is just so terrible out there. I need that confirmation. Same thing with the Qs. I need to see that bounce. I need to see that failure. That's what I need to see. I need to see that before I can really get really bearish here. I've been showing you this chart over the last couple of weeks, and I thought it would be disingenuous if I didn't show it to you. I talked about how the NASDAQ and the S&P were really falling apart, but the RSP was holding in there. Guess what? It is no longer holding in there. This is completely fallen apart as well. So what started off as a sell-off in the Mag 7 has really made its way into all sectors, all stocks. This is really not anymore just about the Mag 7. This is a major sell-off across all of the asset classes and the sectors. So let's talk about this week. This week, I'm expecting a failed rally. Now, let me just really talk about what that means. This is my opinion. This is what I think is most likely to happen. I don't trade my opinion. It's one of the things I'm the most proud of as a trader after all these years in the business, is that I no longer trade my opinion. I will make a trade that is completely opposite of my opinion of what I think is going to happen because the charts tell me to do it. So, this is what I'm expecting. If it doesn't happen, I am fully ready to say, okay, Rob, you were wrong. Let's go do something else. Let's go try again. Let's go position ourselves in other ways. But this is what I'm expecting this week. We're going to keep getting more volatility. Anytime this president is able to tweet or to send something, or in a news conference, we know that it's going to be market moving news. So again, volatility. And we do have a Fed meeting this week on Wednesday. They are not expected to do anything with rates. They're going to keep them where they are. The big question is, and I think this is pretty much a given, is that they're going to express the same concerns that the consumer sentiment showed, is that they're worried about inflation and inflation expectations, and they aren't going to be able to cut rates until they know that those are coming down. So I think the Fed is in this really tough place of stagflation where you have growth that's falling apart, but then you have persistently high inflation that is actually growing a little bit in some measures. Puts them in a tough spot. We'll hear what they say on Wednesday. Other than that, we got retail sales that's going to let us know how the consumer is doing. But other than that, I think really people are really worried about what's happening in March, April, May's numbers, and we're just going to have to wait to get those. So that's going to bring us to a -2. I was at a -1, 1.5 last week. I'm at a -2, but I am expecting and really hoping for a rally in the first couple of days of this next week. I would love to see continued rally for a couple of days, get us up into that range of 5680, 5720 on the S&P, and then have a rollover where I could then go ahead and add in some bearish positions. Let's see what happened in the sectors this week. And we actually had some big moves in some sectors. Taking a look at the performance, we only had 2 sectors that were up for the week, utilities and energy. That was it. Everything else was down. Now look, we had already been very negative on consumer. That was the worst sector, so that did not surprise us. Consumer continues to underperform. We were very negative on technology. It was about a market perform, but this is where the 2 that really surprised me. We had 3 sectors that were above 0 last week, and they were showing some real strength. Real estate and healthcare and consumer staples. These got obliterated, especially consumer staples. So the 3 sectors that had been holding up on bullish sides, they're no longer holding up. Like I said, these were holding up because everyone was like, oh, let's play around with our allocations. Now this is wholesale liquidation. And when you get wholesale liquidation, it's basically people are selling everything. They're saying, hey, you know what? I want to move to cash. I don't want to be in stocks. I want to be in cash. That's, again, another sign of real serious selling. And I've mentioned this is not retail. This is institutions really raising cash areas. So across the board, everything looked down except for utilities and energy. So here's utilities. We were to zero last week. We're to zero this week. So no change in utilities. Likely to hold in there nicely. Could it make a run up to the top of its range? Maybe, but if really, this is just sideways. If you're looking for sideways stuff, utilities looks good. Communication services had gone from a +2 or a +3 to a +1 to a 0 to a -1 to a -2, and that's where we say right here. This one continues to deteriorate. So this is now a -2. Real estate had been looking good just 2 weeks ago. 2 weeks ago is looking good. And then you can see we've had 2 weeks of people just saying, you know what, I don't want to be in this sector, moving it down to a 0. Moving averages are flat, so not really any trend here. Healthcare was another one that was just looking great. Everything looked great in healthcare. And then this week, just a sell-off across the board. It's really still just a 0, so we go from a +2 to a 0. It's not bearish. It just has lost any upward momentum it had. Going over to industrials, we were at a -1 last week. It's a -2. It got progressively weaker. Last week we had financials, also got progressively weaker. I do want to point out that financials had the best bounce on Friday. I actually think financials, if we do have a continued bounce next week, I think financials could probably be the best performing sector next week if it's an up week. I think it had a very nice bounce. And take a look at these candles. We had 4 candles here that didn't really go anywhere. While the rest of the market was really falling, these candles didn't. So again, with the big gap down on Monday, now we've got a decent candle. I'm not saying I like financials for a long-term hold, but I think any short-term bullishness, I think financials is where it's going to be. Move over to consumer. Consumer looks terrible. And look at the difference between the bounce. Take a look at the difference in these 4 candles that we just looked at for financials. And then take a look at the difference in the bounce. That is just a pathetic bounce after 4 nasty, ugly days. Money is not moving back in here. Could this thing have a bounce? Of course. I hope it has a bounce. I would love to enter some more bearish trades in consumer discretionary. Just like in healthcare, this thing was looking great. Consumer staples holding in there. And then again, everyone just sold. It was just pure selling across the board, taking us from a +2 down to a 0. Not bearish, but no longer bullish. Tech also fell. I'm going to put tech in the same group as financials. Yes, we had some selling on these 4 days, but it wasn't intense like it was in like consumer and in like communication services. And then we had a good bounce on Friday. I could easily see tech having a bounce, which I would love to see because I would love to take some more bearish positions in tech after a little bear rally. So it's gone from a -2 to a -3. Next up is materials. You see, it did weaken last week, so we lost a little bit of strength in materials, had a decent bounce, but we're going now from a 0 to a -1. And then energy had a nice day on Friday. This is another one. If you're looking for some short-term bullishness, this one's got it. And take a look at the lack of selling on these 4 days and then the big jump on Friday. But look, it's just going nowhere. So if you want to do something short-term bullish, sure. Energy looks okay to me, along with financials and tech. But this is the movement of the week. So we've seen materials, industrials, comm services got a little bit weaker. And then our strongest side of the market, staples, healthcare, real estate, they all fell apart. They all lost all their bullishness. So we're now left with nothing in the bullish category and 6 sectors in the bearish category, with technology and consumer to be the worst. This is what bearish markets look like, where you don't have really any good places to go hide when there's wholesale liquidation. All right, let's jump into our slots. We only had 2 trades roll off last week. We had a bearish trade in Lennar that rolled off for a max gain, and we had a neutral trade in Barrick Gold that ended up with a small gain. So only 2 rolled off, but both for gains, which is always nice to have those, but only 2. Let's take a look. We're at a -2. What does that mean on our allocation? I'm going a little bit further down as we get a little bit more bearish. So it's telling me, okay, here are the trade slots I have available. I can now do a -3 trade if I want. I do not want to do one at this moment. Do I want to do a -3 trade if we get a nice rally and then a reversal candle and a confirmation candle? Absolutely. But until then, again, I'm looking to be a little bit more cautious. I'm going to enter some mildly bearish trades, one in comm services, one in industrials. Going to do -2 in consumer, -1 in materials, and then a neutral in energy. You can see I'm going to avoid financials because look, I can't do any more bullish slots over here. I'm already full of bullish slots, so I can't do anything bullish. So I'm going to let that financial sector just sit there. I'm going to really focus on things that are overly weak. So let's go ahead and take a look at some potential trades to fill those slots. First up, comm services, Match.com. Let me just talk about bearish trades here real quick. And I talked about this on my Tuesday video. Whenever you have a very, very bearish market, and again, this isn't Match.com, but on other stocks where the weakest stocks have plunged the most, they've plunged the most. And it's very difficult to take a short because they plunged so much, because they're going to likely have a nice little snapback. So then you go and look at the things that haven't fallen yet. And that's a trap, because the things that haven't fallen yet are showing relative strength. So you actually want to avoid those. So when I was looking for trades this week, looking at, okay, all the weakest stuff wasn't at a good shorting opportunity, but all the stuff that it held in is a trap because it's showing relative strength. So I actually was very thoughtful about what I was looking for. I really wanted to find something that wasn't bullish when the market was bullish and actually had some pretty good selling this last week. So nice bear rally off this. This is just a beautiful bear rally. This is where we love to enter trades, right in these areas off these bear rallies. We've come down, lots of selling. We had a bounce on Friday. I would love to see another bounce or two. Would love to get up here into the 31 to 32 area where I initiate a new short position. And look, I'm only going to be doing a -1. So this doesn't need to break below this 30. I just need to be in this area. So if I can get a rally up into this 30, 31.50, 32, then I can open up this 31.32 and actually have a really nice, easy trade. So that's what I'm looking for. I'm looking for this to rally up. I got the 31, 32.50. So again, if you can get it up into this area and get that bear put spread, again, it just has to just be in this area and it's going to be a nice gain. The only thing I'm looking to be more aggressive in bearishness is the consumer sector. I'm really looking at the consumer sector as the best one to be bearish. Industrials has weakened. It's gone from a -1 to a -2. This one, again, I had a difficult time finding trades, and I think you're going to fall into the same thing, where the weakest stocks look like they're too far gone, and the things that were outperforming is actually a trap. Oh, it hasn't fallen yet. Well, it hasn't fallen yet for a reason. So this one, I like this one because it is absolutely cratered. And it had a really big snapback from 146 all the way up to 161. That's a really big rally here. 15 points. I mean, that's like 10%. So we got a 10% rally off of a 30% fall. That's where I love to see these bear rallies, is when we get these big monster rallies. Just needed to get up in this area, somewhere in the 160 to 164 area. Give me a reversal candle. Give me like a shooting star doji. Give me a confirmation. And I would love to jump in and get some sort of bearish spread here. And it's only going to be a -1 trade. So if I can get this, one I'm really hoping to get is the 165, 170. Big question is, will Boeing get up to this range? If it gets up to this range, this is the trade I'm looking at. If it doesn't, I'll have to drop down and look at the 160, 165. But the one I'm looking for is up there at 165. I am expecting there to be a decent bounce at the first part of this week, and I hope it's a nice bounce because I would love to get into some better areas to go more bearish. In the consumer sector, this is the sector I want to be the most bearish in, so I'm wanting to find the worst trade, and I came across Rivian. And Rivian is just a classic underperformer. It's been under pressure. And in bear markets, these companies that don't make any profits yet, these speculative companies, they have really get hurt. And just take a look at these candles. Yes, we didn't go down this week, but boy, we sure didn't go up on Friday. There is not people running in. I mean, go ahead and take a look at some of the stocks out there. Take a look at Palantir. Take a look at, the Mag 7. They had nice bounces on Friday. When the money's coming in, it's coming into those. It is not coming into Rivian whatsoever on Friday off a bounce. I really like this one. I don't think you need to wait for this one to even bear rally. If we do get a nice candle on Monday, that's just a bonus. That's just a bonus. But I'm really looking for, again, the 1050 to 1150 is going to be the area I'm looking at. Again, not real bearish. Oh, sorry, I'm at a -2 on this one. That's why I'm looking to do the 1110. Looking to go all the way down to 10 here on the target. And I'm going to give that one 2 weeks here. And lastly, in materials, we have another -1 trade. Cleveland Cliffs. Same thing. Lots of weak stocks have fallen. This one kind of reminds me of the Boeing chart where it was very weak, had a big fall from 12 down to 8. I mean, that's just a monster move. We've recovered about half of that. If the market turns over, again, I really like this one, especially if I can get it up in here. I mean, that would just be beautiful. And to me, I'm looking for the 1110. Looking for the 1110 bear put spread. If it can come up in the 1060, I can grab it. That's giving me 2 weeks for it to fall back down below 10. If the market is bearish, that is highly likely to happen. Cleveland Cliffs CLF in the material sector. Go ahead and wrap this up. Expect volatility to continue. Talked to a couple traders last week. Talked about volatility. Talked about how, there's certain trades that do well in rising volatility, and there's some that don't do well. Avoid the high volatility or the short volatility trades. Just avoid them for the moment. If you wanted sell a put, just do a spread. Just do a spread. Do a put spread. Do a put spread. And then when volatility chills out, you can dump your long put and just go back to a short put. But there's no reason at all to be holding short puts or entering new short puts here. There's no reason. Do it as a spread and then take the long leg off when the market cools down. My opinion is this week will likely confirm a bearish market. I think we're going to get that move, and I think the Fed meeting on Wednesday could be the catalyst for it. So if that happens, you're going to hear me become a lot more bearish in my targets for my trades. Right now, I'm still kind of at that -1 area, not really looking to push it, but you will see me, I'm going to start pushing it a little bit more if we start to get that confirmation. And look, if you just don't like these kind of markets, don't like rising volatility, it's too much for you, as we've said lately, cash is a position. I have some traders that have told me, Rob, I'm a long-only trader. I only go long. And I always try to say, hey, be a well-rounded trader, be able to do everything. And they say, I stink at going short. I suck at it. I've tried it. I've tried practicing it. I suck at it. So I'm just not going to do it. You know what? That's great. Then just don't do it. So if it is a bearish market, just sit on cash. That is a position, that is a trading choice. Thank you so much for joining me, and we'll be updating you for this week. Goodbye, everyone.